Wesfarmers had a strong result. It was up, profit was up 11% to 2.1 billion. But I thought the Kmart division was the terrific story. Its boss, Guy Russo, has really turned things around there. Here's Richard Goyder, the CEO of Wesfarmers, talking about that.
The Kmart performance was a terrific performance, and that's on the back of strong improvement over the last few years in that business, and it's a credit to Guy Russo and Ian Bailey and the team at Kmart. And you know what, I guess the lesson for any retailer, what Kmart's doing is that the offer is resonating with our customers. We've got more customers in stores buying more products, and that's been the case, I think, for 10 quarters now in Kmart.
So you'd all be shopping in Kmart?
Well, I actually do, Alan, because I've got a 2.5-year-old daughter and she loves places like Kmart, and it's a very inexpensive place to shop. And I'd say this, if more people are shopping there, it probably means they're not shopping in more expensive locations. And I reckon that's...
Target's gone down.
Well, but that's a story for Australian retail at the moment. People are shopping, but they want a lot more bang for their buck.
But I think we've also got to understand that, unlike some of the other... let's just take Bunnings, for example, which was running along beautifully and has got a much more meagre sort of 5-6% earnings growth. Target's got a much bigger one, but Kmart's got a much bigger one, but Kmart was broken. It's in a massive turnaround situation. So while it's going ahead in leaps and bounds, it really had to, and a lot of attention has been paid, and it's come off a very low base. And I think we have to remember that about
And when you looked into the Wesfarmers result, what did you think about Coles?
Coles was a very good result, and really, the investors only look at Coles because Kmart, as good as it was, is tiny relative to Coles. Coles is the engine room of now the entire of Wesfarmers. So how Coles goes is how Wesfarmers goes.
And its profit went up 16%.
Yeah, it had a good result. And it's really whipping Woolies into shape.
It's an interesting time for the stock market as well, because if some of these retailers are an opportunity if things have bottomed a little bit, and we've had a couple of little signs that they have.
I mean, I did read that of the 2.1 billion I think Wesfarmers made, 1.3 something came out of Coles. So people are right to look at Coles first and foremost.
How do we reflect on JB Hi-Fi's profit going down a bit? I suppose
it was simply better than expectations. I mean, JB Hi-Fi was almost priced for oblivion, not complete oblivion, but the profit was only down a little bit. Well, but I look at like-for-like sales. Like-for-like sales, they were still negative at JB Hi-Fi, and that's not good for any retailer going forward.
It's also still rolling out stores, which is at a pretty rapid rate. It's got the best sort of metrics of a retailer that you can actually get out there. It's super low cost, super high sales per square.
A lot of its products are getting sold online now, though.
Yeah, that's right. So it's got great metrics in terms of rolling that sort of stuff out. But you're right, its product is oblivion, but it's getting a really good online presence as well. But it's challenged, definitely challenged.
The share price bounce is like there are a lot of companies that have done really well in this results season. Their share prices have halved, thirded. One of them, BlueScope Steel's up 50%. Everyone's wooing about it. It was down 90% before that. There are a lot of resurrection stocks here, and you have to ask whether it actually turns into